Hey, Mobil Trades! I want to do a video analysis update of the stock market. We'll talk about the S&P, as well as Microsoft and Apple, AMD and Micron and Qualcomm, Oxy and Exxon Mobil, Transocean, as well as ET, Uranium Fuels and John Deere, Penn Gaming, Southwest Airlines and Carnival Cruise, Gold, Barrick Gold Corp, Silver and First Majestic, ICLN, Next Area Energy, First Solar, QCLN, Li Auto, NEO and Tesla, as well as Xpeng. We'll talk about Fuelcell, ARC-F, Netflix, Shopify, Roku, Bitcoin, Hut Mining. We'll talk about a lot of stocks in this channel that weren't listed, but here is a wave 1 and a wave 2 for the S&P. And I think this is a wave 3 and a wave 4 that has ended at the 38.2% fib. Now, as of right now, we haven't broken below the 50% fib, which is usually the wave 4 invalidation, especially for kind of a lower beta index like the S&P. If we were above 400, I believe this is a wave 4 that ended. But what if we broke below 400, right? What if we broke below 400? First, let's answer if we didn't. If we don't break below 400, the length of wave 1, place of the wave 4 low, says the S&P is going to go on a wave 5 higher to the 550s. Now, what if we do break below? What if we do break below 500? What if we go to the 50 to 61.8% fib? Well, then I don't believe that this is a wave 3 that formed for the past year, okay? If we go below 400, then this is not a wave 3, because a wave 4 should end between the 38.2 to 50% fib. So if it gets towards the 61.8% fib, we don't call that wave 4 usually. We usually call that another wave 1 and another wave 2. So if we did go to 380, if we did go below 400, I don't think it would be the end of the world. I think that would be another wave 1 that formed for the past year. This is a wave 2, and then the length of the entire rally that we just experienced since September of 2020 would only have been a wave 1. It would be the minimum wave 3 target before a shallow wave 4 and a wave 5 higher. We would be going a lot further than the 550. So let's get some better levels for the downside for the market. Talk about XLK right now. So XLK is a very similar idea where this is a wave 1 and a wave 2, and this is a big wave 3 that went past the 161.8% extension of wave 1, and this is a wave 4 ending at the 50% fib. So if we're above 135, right, if we continue to just hold this wick at the 50% fib, then this is a wave 1 and a wave 2, this is wave 3 and wave 4. The length of wave 1 place of the wave 4 low would take XLK to 201 for a wave 5 target. But what if, right, what if XLK fell to 135, right? Well, that would be the 61.8% fib. So the 61.8% fib of a rally that was clearly subdivided into 5 waves, right, that ends with a new high on the RSI. Well, that's not normally a wave 4. It's normally a wave 2 correction, which means that just like the S&P, that whole wave 3 rally wasn't a wave 3. It was another wave 1 and another wave 2, and then we're going to have the length of this whole rally be replicated for wave 3 before a shallow wave 4 and a wave 5 higher. XLK would be going much further than the 200s if that was the primary expectation. If we look at Microsoft right now, Microsoft gives great levels to the downside and the upside for really kind of defining what this is. From this low, I think this is a wave 1 and a wave 2, and this is a wave 3 and a wave 4 that ended at the 50% fib. So if we hold right now above 254, the length of wave 1 place of the wave 4 low, we'll take Microsoft to 373. We could go past 373, and then the length of this whole wave 3 rally place of this wave 4 low would be the wave 5 target. But what if, right? What if Microsoft did fall to 254, right? And would I ever bet on Microsoft falling to 254? No, I wouldn't bet on that. Because as we just learned from Oxy, you don't short anticipated corrective waves. You prepare for them by hedging or by having cash ready to buy the dip, right? But what if Microsoft fell between 272 to 254? Well, then I would say this is a wave 1 and a wave 2. The length of wave 1 place of the wave 2 low is going to take Microsoft a lot further than the 370s because it's within wave 3 of wave 3 from this low, right? And it's kind of very similar to actually what did happen a year ago, right? We have Microsoft, we have Tesla, we have Apple and AMD and XLK, right? They're all over these option screeners. I'm getting trolled because the oil stocks were primarily what did well, right? And people are saying, Apple's never going to go to 180, Tesla's never going to go to 1200, right? And then all of a sudden we have a quad witching date, right? That March quad witching date that's very famous is right around the corner, and it could lead to a massive rotation into tech. I think that Apple is a very pretty chart in a lot of views. My biggest kind of view with Apple is that this is a wave 1 and a wave 2 that formed from March of 2020. So it's within a large degree wave 3. I think one way to view Apple is that from this low, this is a wave 1 and a wave 2. It has this big wave 3 that's subdivided into 5 waves. And now it's ending wave 4 at the 38.2 to 50% fib, right? So if it's above 149, I believe this is a wave 4. The length of wave 1 places the wave 4 low, gives a short wave 5 target of 194. Possibly if we go further than that, the length of wave 3 places the wave 4 low, could take Apple to 218 for a, deeper wave 5 correction. But what if, right? What if Apple goes to the 61.8% fib of 141? Well, then I don't think this whole rally from May was a wave 3 or a wave 4. It was probably another wave 1 and another wave 2. So if we go deeper for a lot of these, I don't think it's the end of the world. We'll get to some more useful invalidations for a lot of these stocks since that's the case. But right now, I think that Apple will hold above the 50% fib of 149 and go the length of wave 1 places the wave 4 low for a minimum wave 5 target of 194. It could go deeper than that. Even if it's wave 5, if wave 5 is the length of wave 3, Apple can go to 218. So if it's above 149, I'm very comfortable saying this is a wave 4, right? But if it went to 141, right, the 61.8% fib, then I don't think that would be a wave 3 and a wave 4 that occurred. Just like Microsoft, I would believe that this is another wave 1 and another wave 2 for Apple. So for a lot of these stocks, even if there were more downside, even if SPY fell below 400, I don't think it would be the end of the world. I think what we'd end up doing is we'd be calling the entire rally that has occurred for the past year a wave 1, and then wave 2 says that it would be replicated for wave 3. We'd have a shallow wave 4 and a wave 5 higher. In both scenarios, the length of this rally placed at this low would take Apple up to the 200. So I think for Apple, all roads lead to 200. And until we get below the 50% fib, I think the most likely count is that this is a wave 3 and a wave 4. We'll go on a wave 5 higher to the 190s up to the 200s. Here's AMD. AMD looks like a pretty clear replica of Tesla from this exact same low that formed in May of 2021. It has a huge 1, 2, 3, 4, 5 waves impulse that forms a wave 1. This is an ABC ending wave 2 at the 61.8 to 78.6% fib. So I think AMD will hold. 92, the widest invalidation for a wave 2 is all the way down at 72, so that's a little wide for AMD, but the beginning of wave 1 is the biggest invalidation for a wave 2. The length of wave 1 places the wave 2 low, says 92 is a little tighter, but AMD can go on a wave 3 up to 191 before a shallow wave 4 and a wave 5 higher. It's very similar, right? AMD, it was a huge loser. It was this POS doesn't move, right? And then it was on all these option screeners, right? The quad witching date comes and AMD just immediately explodes for the summer, like a lot of tech stocks. And I think that we're going to see a lot of these rotations all of a sudden happen, right after the March quad witching date. We look at Micron, we look at Qualcomm, we get pretty good evidence that we just kind of made a wave 1 from this low that formed in October. So I think for Micron, the biggest view is that this is a wave 1 and a wave 2. And I think this is another wave 1 and another wave 2. But the most important cycle is just from this low that formed in October. I think this is a wave 1 and a wave 2. We're going to go on a wave 3 higher up to the 120s, up into the 130s. And that would end, in my opinion, this red wave 3. We'd have a shallow wave 4 and a wave 5 higher. So I think right now, I want to see Micron above 72. That's extremely tight. The invalidation for a wave 1 to have formed is the beginning of wave 1. So that is 65. If Micron's above 65, that's a little wider level for market bulls in general. Very similar to Tesla. This is a wave 1 and a wave 2. Until we break that wave 1 low, I'm expecting Micron to go on a wave 3, much higher into the 120s, even the 130s, before a shallow wave 4 and a wave 5 higher. Qualcomm is identical, right, from this exact same low. By the way, both Micron and Qualcomm were on all these option screeners before earnings. They were playing a huge move, and it was to the upside. I think very similar to Micron. This is a wave 1 and a wave 2. This is a wave 3 and a wave 4. But I think just from this October low is all that matters. This is a wave 1. Now an ABC correction ending wave 2 at the 61.8% fib. So I think Micron and Qualcomm, they both say, hey, I think Qualcomm above the 78.6% fib of 137, that's a great level. The biggest invalidation would be 122. 137 I like a little more. We are going to go on a wave 3 higher. Ultimately, the larger wave 5 target would be the length of wave 3, place of the wave 4 low. So I think there's a lot of evidence that Micron's going to the 120s and Qualcomm could be going into the 230s, and the market probably won't crash during that time. Here's Oxy, here's Exxon Mobil. So these two hopefully taught why Elliott wave theorists aren't supposed to short corrective waves, right? Even if it was the other way, an Elliott wave theorist isn't supposed to short or really trade wave 2 or wave 4 because they are corrective waves. An Elliott wave theorist only trades waves 1, 3, and 5, okay? Because these impulsive waves 1, 3, and 5, they can extend, and that's where it goes a lot further than what I call the minimum expectation. So Oxy went wave 1, wave 2, and it went way past the 161% extension, had a shallow wave 4 and a wave 5 higher. So I think what Oxy and Exxon Mobil both have done, they've gone the length of wave 1, place of the wave 2 low. So that's probably a good reason why chasing Oxy and Exxon Mobil isn't a good idea. That's a very important equal X target. But even if Oxy formed a bull flag and went sideways for a little bit, I think that would only be a wave 4. And one of the biggest reasons is because there's a rule in Elliott wave theory that says wave 5 must end with momentum divergence, right? So when Oxy went on a wave 1 and a wave 2, not only did it break above this high in price, it broke above all these highs on the RSI. I think that really helps to support that if Oxy forms a bull flag, goes sideways for a while, and this is a wave 3 it put in, it'll end wave 4 and go on a wave 5 higher. The length of wave 1 place of the wave 4 low could take Oxy significantly higher. In the bigger picture, let's talk about Exxon Mobil, because Exxon Mobil is a little more clear view of that. It's a wave 1 and a wave 2. And from this low, this is another wave 1 and another wave 2. So Exxon Mobil and Oxy, they both broke the high on the RSI and helped to confirm they're within wave 3 from the October 2020 low. So the reason that I think chasing Exxon Mobil and chasing Oxy might be a bad idea is because they've gone to the length of this wave 1, place of this wave 2 low. That's exactly where Exxon Mobil is right now. That's 86. Exxon Mobil is at 87, right? But even if there was a wave 4 is normally a bull flag. I'd be looking for a wave 5 higher. If wave 5 was the length of wave 1, place of the wave 4 low, then Exxon Mobil could be going into the 100 range, right? The mid between 100 and 110 could be a wave 5 target, but that's kind of in the short term. What's the bigger deal with Exxon Mobil and Oxy is that they've just done kind of what was crazy a few months ago, right? If you were looking at oil, you were looking at gold and silver, you were chasing losers in December, right? But there was all this option activity. They were on iVolatility.com's top 200 volume and open interest while they were in the bottom IV rank and percentile, right? They're both near 0% IV rank. Lots of options volume. So that supported the idea that institutions were loading up cheap options, preparing for a big move. And if we look at the all-time chart, this is a wave 1 and an ABC wave 2. And this sounded crazy just a few months ago. But ExxonMobil, in the bigger picture, will go challenge this wave 1 high on the bigger degree. And I think LNG forms this exact same 2014 summer high. I think LNG is already above this. Enbridge is going to go probably break that. We're seeing some oil stocks go break above that 2014, 2015 high. What's going to happen is ExxonMobil one day will be above this high. It will show that this is a wave 1 and a wave 2. It's within a multi-year wave 3, right? So gas prices aren't going anywhere. And so this was the appeal with ExxonMobil, was that it was a dividend aristocrat. It was a stock that paid a dividend, and it was a value stock, right? It was a blue chip. We can't really function without ExxonMobil. And it was so silly and so outlandish, and then just in a matter of a month, right now it's kind of, oh, wait a minute, it can go see an all-time high. It can confirm that it's within wave 3 on the larger degree. And this multi-decade rally was just the wave 1. We ended a incredible wave 2 before wave 3, 4, and 5 higher, right? That was all silly 2 or 3 months ago, right? Anyone who bought ExxonMobil and Oxy, they were chasing losers. Now that's the only sector that's giving in the market. And this is the exact same view that could be at stake right now in the transportation sector. So let's talk about why I'm not going to go short Exxon, Mobil, and Oxy. One is because they're in impulses, right? So I don't trade the corrective waves. Two, I think there's a lot of stocks in the oil sector that can play catch up. Transocean, what it did today, it formed a wave 1 and a wave 2. Now it exploded above this wave 1 high. And I believe it confirmed it's at least within a wave 3 going to 7 to 7.90 before a shallow wave 4 and a wave 5 higher, right? So I think 7, that's just the stop, right? That's just the next stop. I don't think that would be the top. We'd have a shallow wave 4 and a wave 5 higher, right? So Transocean's going to 7. I think Energy Transfer has a lot more upside. It hasn't really moved at all. But I think what's very quietly going to happen is that natural gas is going to start to follow what crude oil just did. So I think more natural gas related ideas could be, more alpha. That's just something I'm looking at, but I think this is a wave 1 and a wave 2 for ET. I think this is another wave 1 and another wave 2. The length of wave 1 placed at the wave 2 low is going to take Energy Transfer to 14.50 for wave 3 before a shallow wave 4 and a wave 5 higher. So this is a good time. This is a good time for me to say that I bought a straddle on Energy Transfer today. So I bought the 2023 January straddle where the 10 call was paired with the 10 put. So each of those lots in total was $285. So I have a straddle on Energy Transfer. So I'm playing for a big move, and I think that move will go to the upside. The length of wave 1 placed the way too low will take ET up to 14.56. And you remind me later, the length of wave 1 placed the wave too low says 14.56 is the minimum wave 3 target. It could go up to 15 before a shallow wave 4 and a wave 5 higher. So that's ET. I think that there's a lot of energy stocks that will play catch up. So here's uranium fuels, right? What's interesting now is that it kind of made sense when they said, oh, well, the stock market will crash, but during that time, oil is going to do really well and the precious metals are going to do really well, right? It's kind of like, oh, okay, I guess I could see that. But then they added clean energy to the list. And I was like, wait a minute. Clean energy is going to do well while the stock market crashes? That doesn't really make sense to me, right? But that's what they've been saying. And one thing the fundamental media can help you with, they can help you see correlations that aren't there. Probably the best example was what happened in 2020, right? They said, hey, if you're not dividing this market into stay at home and reopening, you're not going to do well. So we look right now, instead of stay at home and reopening, we kind of have war and peace, right? And kind of some of the war stocks like oil, like the metals, like apparently cybersecurity, apparently clean energy, being long them might be kind of diversification hedges, right? But I was diversifying into these before the invasion. Let's say 1, 2, 3, 4, 5, wave 1 and wave 2 for you. I think this is another wave 1 and another wave 2. So the length of wave 1 placed the wave 2 low can take uranium fuels to 12.50 for a minimum wave 3 target, we'll have a shallow wave 4 and a wave 5 higher. I think that there's a lot of evidence that this is going to play out from UEC. I think Denison Mines is a very similar idea, but UEC is uranium energy. It's a almost identical chart to uranium fuels. I think this is a 1, 2, 3, 4, 5 wave 1 and a wave 2. I think this is another wave 1 and another wave 2. And I'm very excited as an energy fuels bull to see UEC go break this high, this exact same high. I think this is a wave 1 and a wave 2 for UEC. The minimum wave 3 target is above 6. We'll have a shallow wave 4. The retest of wave 1 high, the length of wave 1 places the wave 4 low. It says UEC can go to 9.50. I think uranium fuels would be probably getting close to 18 by then maybe. So here is John Deere, right? So John Deere is going to do well while the market crashes, right? And I guess maybe that makes sense. But remember, John Deere is a massive holding of most of the industrial ETFs, right? A lot of the infrastructure ETFs. I believe John Deere is one of the biggest holdings of XLI, if I'm not mistaken. And that looks like this is a wave 1 and a wave 2. Very quietly, John Deere hit a new all-time high today. And what it kind of shows is that this is a wave 3, an ABC wave 4 that ended at the 23.6 to 38.2% fib. So the length of wave 3 placed at the wave 4 low can take John Deere to the 600s, right? And the market's going to crash while that happens. I'm not sure that's going to be the case. Look at Penn Gaming. We'll look at Draftkings. So Draftkings doesn't have a great low to trade against. I think Penn Gaming has a nice level of 33. That's 78.6% fib. With really high beta stocks, sometimes that 78.6% fib gets clipped. But usually I'll use a weekly close. I think this is a wave 1 and wave 2 for pin. I think this is another wave 1 and another wave 2. So the length of wave 1 places the wave 2 low. Says that this is the left side of the base, right? And this is the right side of the base. We're going to have a high volume base breakout, in my opinion. And it's going to go all the way up to 177 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. I like pin above 33 is the best downside level for DraftKings. But realistically, I manage risk with position sizes, and I use a lot of option straddles like the one I bought on Energy Transfer. Here's DraftKings. It's a very pretty chart, right? And this is a very pretty chart for growth and reopening, very similar to Uber in my opinion. This is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. I think this is a wave 1 and wave 2. So the minimum wave 3 target, which sounds crazy now, is 81. But that's actually a conservative wave 3 target. If this is the case, we'll have a shallow wave 4 that retests the wave 1 high. And then the length of wave 1 places the wave 4 low. Well, I'm not going to say that, right? But it just kind of shows why they might be making some of these growth stocks difficult, right? And now apparently the clean energy stocks are going to do well, right? That's the growth sector, right? Clean energy is a growth sector. I think DraftKings is another growth stock that looks suspiciously good. Anyway, here's Southwest Airlines. Just a few months ago, it was crazy to think that oil could put in a super cycle wave 2 low, that oil could be a generational multi-year opportunity, and that many of those oil stocks would pay dividends, right? That was a far-fetched, crazy, alarmist idea 3 months ago, right? And now it's kind of a mainstream view that, oh, duh, right? Of course that's going to happen, right? Because of this, right? We never know what because is. And I think right now that sounded crazy, but what's going to happen in the transportation sector might be just as big. And I think that Southwest is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2. It's at the 61.8% fib. So if it's above 31, then this isn't Lordstown Motors, right? This is an EBON. This is a stock that the world needs to function, and it can go the length of wave 1, place the wave 2 low, right? Was Oxy ever going to go to zero? Was Exxon Mobil ever going to go to zero? No, right? So when a stock's a value stock, I take a bigger position in it because I know I kind of have a fundamental margin of safety. I think Southwest kind of fits that. This is a wave 1 and a wave 2, right? So Southwest probably won't go to zero. I think it's going to go explode from this 61.8 to 78.6% fib zone, hold above 31, and go to 79 before a shallow wave 4 and a wave 5 higher. And if you think that's crazy, then Carnival Cruise Lines is going to blow your mind. But I think this is a wave 1 and a wave 2. And I think this is another wave 1 and another wave 2, ending at the 78.6% fib. So 12 is pretty tight, but I think this is a wave 1 and a wave 2. CCL will go to 43 for wave 3 before a shallow wave 4 and a wave 5 higher. Right, so I think Mr. Market, he's kind of giving us a gift. Someone talked about the idea of a war-proof portfolio, right? So there's going to be this market crash apparently, but there's also going to be all these huge sectors that do really well during that time. So I guess I'll just own those, which I've been doing before the war. I think this is a wave 1 and an ABC wave 2 for Barrick Gold Corp, right? And what Barrick Gold Corp is about to do is what Goldfields has already done, what Pretium Resources PVG has already done. Go break that August to September high from 2020. And then that would show this is wave 1 and wave 2, right? The length of wave 1 places the wave 2 low. Says just like the oil stocks. Retail was bored of this sector. Anyone who bought this was chasing losers. But institutions were loading the crap up with options, right? And now we're seeing with Oxy why they were doing that. With oil, I think we're about to see why they were doing that with silver. Barrick Gold Corp made a rare appearance on the bar chart straddle and strangle screener. I think it's going to 35 before a shallow wave 4 and a wave 5 higher, right? But one thing I'll say before we get into silver is, one, Goldfields just gave a huge leading indicator, a huge piece of evidence for a lot of precious metal bulls. This is a wave 1 and an ABC wave 2 at the 61.8% fib. And I pointed out in November, well before the war, that PVG had already broken this wave 1 high. So I said, GDX, just pick a gold miner. They're going to go follow. And one of them that I picked was Goldfields, was going to go break that exact same mid-September high. So now Goldfields and PVG have broken this September high. So if you're an Elliott Wave theorist looking for bear counts on Barrick Gold Corp, the first thing you have to do is find a bear count on PVG. And I'll tell you, even if you're a bear saying this is wave A and wave B, the minimum wave C target is 18.90. I think realistically, that's actually the minimum wave 3 target. We'll have a shallow wave 4 and a wave 5 higher. If wave 4 retests the wave 1 high, right, and wave 5 is the length of wave 1 placed at the wave 4 low, then Goldfields can go to 25 within the cycle. So obviously the precious metals wouldn't be crashing during that time. But if we look at SLV, kind of like where's the bull market, right? We're really young if this is the case, right? This is not the end of the game, right? People are still getting popcorn. I think this is a 1, 2, 3, 4, 5 wave 1 and an ABC wave 2 for SLV. Basically, if we're above this low right here, then this bull flag will play out that takes SLV up to 36. I think PSLV is a pretty picture. Some people say that PSLV is, better. I don't really know. I don't read the prospectus like that, but a lot of people are a lot more interested in PSLV. Basically the exact same. The length of wave 1 placed at the wave 2 low. Says they're both going to do well in my opinion. PSLV will hold above 7.71, which is a little tight, and it will go to 14.70. Some say that's a little more real than SLV. But anyway, that's PSLV. I think both of these bull flags will play out, but we look at like Pan American Silver, right? We look at First Majestic Silver. This is a young bull market, right? Not really too much has begun. These charts don't really make you say, oh, like I've missed the boat, right? It kind of says the boat is still at the dock. I think this is a wave 1 and a wave 2 for PAAS, Pan American Silver. The length of wave 1 placed at the wave 2 low. Says extremely tight for a low beta stock that's not too bad of 20.73. If we're above 20.73, this is a wave 1 and a wave 2 that ended. The length of wave 1 placed at the wave 2 low. Says Pan American Silver is going to 50, right? And it's a 26. And 50 would be a minimum wave 3 target. We'd have a shallow wave 4 that retests the wave 1 high. Then the length of wave 1 placed at the wave 4 low could take Pan American Silver up to 70. And I think that's really supported. Talk a lot about some of these clean energy, some of these like platinum ETFs, the Palladium ETF. The Palladium ETF broke to a new all-time high. But anyway, here's First Majestic. First Majestic, I think is very young in its bull market. I think this is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. And I got into First Majestic and B2 Gold before the war, right, in January, because I saw that there was a lot of options activity on SLV and AG. I think this is a wave 1 and a wave 2. The length of wave 1 placed at the wave 2 low can take AG to the median of this pitchfork found by connecting this wave 1 with this high and this low. So I think that AG in the bigger picture will hold above 8 and go to 30. And the market probably won't, the silver miners probably won't crash during that time. And it also kind of shows with Pan American Silver that the silver mining ETF is very young in its bull market. Here is ICLN. I'm using ICLN straddles to hedge a lot of my growth, a lot of my clean energy positions. But if we look at ICLN, this holds a lot of Next Air Energy. It holds a lot of Plug Power, right? It holds a lot of First Solar, right? And so those are kind of growth stocks. And they're saying right now that ICLN is going to do really well, but the market's going to crash. I don't think that's the case. I think this is a wave 1 and a wave 2 at the 61.8% fib. We could put in wave 2 right here. And then that would mean the length of wave 1 placed at the wave 2 low is the wave 3 target of 43 before a shallow wave 4 and a wave 5 higher. So 13 would be a very wide stop. I'm using a straddle or multiple straddles on ICLN where the December 20 call and 21 put were kind of paired together. And the 20 call and the 19 put were paired together for some straddles that I'm using because I'm seeing a lot of options activity on Tesla and NEO and a lot of clean energy stocks like Next Air Energy. But anyway, it doesn't really make sense to say that ICLN is going to do really well because of the same reasons that the market will crash, right? Because ICLN holds a lot of clean energy stocks. So this is my second take. So we'll talk about a couple of stocks before Tesla and NEO, but Next Air Energy is a 1, 2, 3, 4, 5 wave 1. And a wave 2, and it looks like it's confirmed it's going to start wave 3 and go break above this high of about 93 and show that it has a lot more upside. So this really is identical to Enphase Energy, both big holdings of ICLN. So Next Air Energy and Enphase Energy, they're looking really good, right? But it doesn't really make sense to say that growth and even the stock market in general will crash while clean energy does well. I think this is a 1, 2, 3, 4, 5 wave 1 and a wave 2 for Enphase Energy and Next Air Energy. I think they're within a wave 3 from this low. So Enphase energy above probably 113 is a nice level. The length of wave 1 places the wave 2 low says it's going to the 280s before a shallow wave 4 and a wave 5 higher, right? If wave 4 retests the wave 1 high and wave 5 is the length of wave 1 places the wave 4 low, then Enphase energy can go up to the 450s in the bigger picture. Let's talk about First Solar. I think First Solar got hit after earnings and then it kind of rebounded. So I'll tell you what I think of First Solar. I think that on the bigger picture, this is a great reason to think that, you know, possibly that semiconductor idea from the early 2000s, 2010s, where the semiconductors were breaking out of a 1 decade base, right? And we didn't really kind of know until it happened. But I think that for First Solar, it really supports the idea that the clean energy stocks have been accumulated for the past decade. And that this is a wave 1 and a wave 2. This is another wave 1 and another wave 2. And yes, this is another wave 1 and a wave 2. They end at the 50 to 61 20% fib. So First Solar is above 61. Wave 2 is in. The length of wave 1 placed at the wave 2 low. Can take it up to 155 before a shallow wave 4 and a wave 5 higher. Let's talk about Tesla. Tesla is a great piece of evidence for market bulls and clean energy bulls. Tesla, Enphase Energy, and NEO are 3 of the biggest holdings of QCLN. We'll talk about that too. I think that this is a wave 1 and a wave 2 from this low. So this is an extremely important chart for market bulls. If we're above this 78.6% fib of 690, that's a nice kind of tight level right now. The Y distant validation is the wave 1 low, which is 539, but I still like 690 the best. The length of wave 1 places the wave 2 low says that Tesla is going to go on a wave 3 up to 1400 before a shallow wave 4 and a wave 5 higher. And this kind of 5, so from May to November rally is the exact same time frame that AMD rallies and Datadog. I think all of them were wave 1. Now we're ending wave 2. Tesla's going to 1400 for a minimum wave 3 target before a shallow wave 4 and a wave 5 higher. So here's NEO. We'll talk about QCLN before NEO. They're both, Tesla and NEO are in QCLN, so is Enphase Energy. So that kind of reminds that, wait a minute, if growth and clean energy are going to do well, then that means Tesla's going to do well. And if Tesla's going to do well, which it looks like it will, then the NASDAQ, the NASDAQ holds Tesla. But anyway, this is a wave 1 and an ABC wave 2 for QCLN at the 50% fib. So if we're about 44, that's a better level than anything on the NEO chart. The length of wave 1 placed at the wave 2 low can take QCLN up to 120 for a wave 3 target if it's above 44. Let's talk about XPEV. XPEV also gives a nice level. Realistically, though, I'm going to hold my clean energy stocks. I'm going to hold all my clean energy stocks. I'm going to hold all my growth stocks. I manage their kind of high beta risk with smaller positions and with option straddles like the ones I've shared. Here is a wave 1 and a wave 2 for XPEV. I believe this is another wave 1 and another wave 2. So I think we're going to hold above 22 and confirm this is a wave 1 and a wave 2. The wave 3 target is 77 before a shallow wave 4 and a wave 5 higher. So one reason that I really want to hold the growth stocks and why I take smaller positions because I want to hold them, it's because exponential growth takes time, right? And that's a big question I ask myself. Just as important as the price target, what's the time target? And for all of the kind of clean energy stocks that I bought, a lot of the Chinese growth stocks I bought, they were a very long-term time horizon. So I didn't even think about selling XPEV when it was up 55% from when I bought it. I didn't even think about that because I wanted to hold XPEV for a long time. Li Auto, very similar. So I think XPEV above 22, QCLN above 44, Li Auto above 20. Those might be more useful levels than anything on the NEO chart. This is a wave 1 and a wave 2. I think this is another wave 1 and another wave 2. I think we're going to see Li go to 49 before a shallow wave 4 and a wave 5 higher. If it's above 20, that's a great level to stay above. Li actually outperforming a little bit recently. Here is NEO, compared to other Chinese EV names. Li's kind of starting to slowly do a little better than the other two. But here is NEO. I think this is a 1, 2, 3, 4, 5 wave 1 and a wave 2. We're seeing NEO and Tesla all over. Yes, the bar chart straddle and strangle screener. In the last couple of times that Tesla's been on that screener, I can kind of tell you them off the top of my head. July 2021 was most recent before a massive rally. And then before that was October of 2020 before Tesla had a massive rally. So Tesla and NEO, they're on the screener again. I think they're going to have a huge move. That's why I have straddles on ICLN, mostly the 21 strikes and the 20 strike call and put for December, but I don't think that the big move will be to the downside. I think for NEO, this is a wave 1 and an ABC wave 2, and I think NEO will hold above 15. The IPO high is 13, so that's a little wider. Realistically, I'm going to hold Chinese growth for a very long time, no matter what. But I do think this is a wave 1 and a wave 2. We're going to have NEO go into the 60s, into the 80s for wave 3 before a shallow wave 4 and a wave 5 higher if it holds above 15 to 13. But I'm going to hold Xpeng, I'm going to hold Lee, and I manage that risk up front, not only with op straddles, but also just taking a smaller position. And I want to hold these for a long time. And kind of my philosophy is if I never need exposure to the Chinese growth or the clean energy stocks ever again, then that's great. I'll never need to invest in them again. But I don't think that's going to be the case. I think NEO is going to explode, and I think that maybe some better levels for NEO is the Tesla setup playing out, is the Enphase energy setup playing out, even is the First Solar, is the Xpeng and Lee setup playing out, and I think all of them will. I want to talk about Fuelcell real quick, because Fuelcell's a little interesting, right? It's this kind of small cap, clean energy stock, right? It's kind of something that we usually associate with some of those high beta growth stocks that we were really fond of in 2020 that became fads and scams, right, in 2021, right? But now there's this narrative that the market will crash, right, but the clean energy stocks will do well, and Fuelcell is kind of responding to that, right? Fuelcell is kind of acting like that might have a chance of playing out. And Fuelcell kind of reminds, wait a minute, if it's a wave 1 and a wave 2, and this kind of, energy crisis, headline happens, then this is a wave 3 in progress, and Fuelcell can go above 29, right? So it's just a reminder that Fuelcell and Plug, right, they're clean energy stocks. And so thinking that the market will crash, but clean energy stocks will do well, it reminds me a lot of in 2020, when March of 2020, by the way, when we were saying the market was going to crash, but all these stay-at-home stocks in the growth sector were going to do well. We were like, wait a minute, that doesn't make sense. Oh, and all these healthcare stocks will do well too. Now we're saying the market will crash, but the clean energy sector will do well. The uranium sector will do well. The precious metals and the oil stocks will do well. That sounds like a crash that I want to be bullish in. Let's talk about some growth, some software-related names. Here's ARKF. Now, I didn't really think we'd be at a point where ARKF was an opportunity to trade against this wave 1 low, but ARKF is an opportunity to trade against this wave 1 low for me personally. If it's above 16, then this is a wave 1 and a wave 2. If it's below 16, then that was not a wave 1 and a wave 2. I think there's a lot of evidence it is. And go on a wave 3 higher up to the 70s before a shallow wave 4 and a wave 5 higher, right? And so I think we're hearing, clean energy is going to benefit from geopolitics. Now cybersecurity is going to benefit from geopolitics. That's very interesting. That sounds like a lot of growth stocks will do well while the market crashes. I think Shopify, with Facebook, with Amazon, with a lot of stocks, but really Shopify joining the party recently, I like it as a, e-commerce bull, because it's like, wait a minute, this one is really a Cathie Wood stock. I think it could be ending a very important wave 2 low. I'll just zoom in on this ABC correction, but really, I just think that this is a wave 2 that is ending at the 61.8% retracement, and this is a 1, 2, 3, 4, 5 waves impulse. So wave 1, right, it's the best thing since sliced bread. In this very short wave 2, it's a fad. So if it's above 391, the length of wave 1 placed in the wave 2 low can take Shopify up to the 1200s, right? The 2300 range, above 1200 for wave 3. Before a shallow wave 4 and a wave 5 higher. That means that the e-commerce sector and really the growth sector in general will do quite well. It reminds me of Snapchat. It reminds me of kind of, a lot of these software-related names like Asana, but Snapchat is another one, right? Where it's a pretty clear 1, 2, 3, 4, 5 waves impulse. And now this is a wave 2 and ABC correction where we're at the 61.8% retracement, or where the length of wave A placed the wave B high is where wave C ends. So if that earnings gap holds, if we hold above 21, a little tighter would be 24, then Snapchat can go up to 100 for that wave 3 target before a shallow wave 4 and a wave 5 higher, right? Datadog, and Cloudflare. There's a lot of these that really don't fit the narrative, right? Datadog's a cybersecurity stock, and now cybersecurity could do well. I think Datadog's a very pretty wave 1 and a wave 2, just like Tesla, just like AMD. This rally is 7 months from May to November, right? So May to November, Tesla, AMD, and Datadog form a wave one. I think they're all in wave two. Datadog, I'm very interested to see, will it hold above 119? If it does, then this is another wave one and another wave two. It will enter wave three of wave three. In the bigger picture, the 78.6% fib of 97 is the invalidation. But if we look at Datadog right now, I think this is a wave one and a wave two. I think this is another wave one and another wave two. It's going to explode into wave three of wave three. I think 118 118 would be very tight. 97 is a much wider level, but I think Datadog holds them, and I think Datadog is going to turn around. So I'm very interested to see if Datadog holds above 118. Here's Cloudflare, right? Cloudflare is another good piece of evidence that all these software stocks, right? It's not just, the laggards, right? The leaders in the software sector like Shopify and Datadog, they're kind of saying that their corrections could be very near complete. I think Cloudflare, like Shopify, like Datadog, it was in the leader category in 2021. Now it's a 1, 2, 3, 4, 5, a big wave one and a wave two. The length of wave one places the wave two low, says that Cloudflare can go to 283 before a shallow wave four and a wave five higher. We'll talk about Bitcoin and we'll talk about Hut mining. So I think Bitcoin on the bigger term view is a 1, 2, 3, 4, 5 wave one and an ABC wave two, right? So they're saying the Russians are moving up the price of gold, right? Maybe soon they'll be saying Russians are moving up the price of Bitcoin. I think it was all those institutional option traders who bought all these contracts on Marathon, Patent Group, and Riot. But anyway, they're not going to tell us that. This is a wave one and a wave two for Bitcoin. Very tight. Ridiculously tight would be 33K. I think this low of 29.8K is more realistic. And I think that Bitcoin is going to go wave one, wave two. The length of wave one places the wave two low. Can take it to 73.7K before a shallow wave four and a wave five higher. If wave four retests the wave one high and wave five is the length of wave one, places the wave four low, Bitcoin can go to 109,000. For this red wave three, there's a lot of upside if it's above 28.9K. It could break below 28.9K and then it would only be up, about 300, 400% from my original post. But anyway, this is a wave one and a wave two for Hut mining. I think this is another wave one and another wave two at the 78.6% fib. So if Hut is above 3.71, this is a wave one and a wave two. The length of wave one places the wave two low will take Hut to 17.90 for a wave three target. We can talk about much further targets beyond that. We'd have a shallow wave four and a wave five higher. But I think I think Bitcoin, I think a lot of these clean energy and a lot of these cybersecurity stocks, all of a sudden we're going to see just like March of 2020. We have that quad witching date and we have a whole new group of leaders. I think a lot of them will be in tech. A lot of them will be in growth and a lot of them will be in crypto.